The big question is, will AI replace hedge fund managers entirely, or will human investors always have the edge? For decades, hedge fund managers were the kings of Wall Street, pulling in billions by outsmarting the market. But now, there is a new player in town, and that is artificial intelligence. AI-driven hedge funds are outperforming human traders, eliminating emotions and making split-second decisions based on trillions of data points. So, the big question is, will AI replace hedge fund managers entirely, or will human investors always have the edge? Well, the hedge fund industry is already changing. Looking at traditional hedge fund managers versus AI hedge funds, with the old model being gut instinct, market experience, and human decision making, and the new model being AI algorithms, predictive analytics, as well as machine learning. The reality is, the biggest funds today are already using AI in some shape or form. AI is crushing human traders in performance. AI-powered hedge funds consistently outperform traditional funds. Why? Well, AI can analyze millions of trades in milliseconds, spot inefficiencies, and execute trades without emotion. Example is the Medallion Fund, which generates returns of over 60% annually using AI and quantitative models. The AI revolution isn't coming. It is already here. Switching to the key advantages of AI in hedge funds, we have data processing power. AI can process petabytes of data in seconds. Emotionless trading, no panic selling, no greed-driven buying, high-frequency trading, executing trades at light speed, backtesting and prediction models, where AI learns from past market behavior and adjusts automatically. Some case studies where AI-driven hedge funds beat the market include Bridgewater Associates, using machine learning for macroeconomic predictions, Citadel's Securities, which deploys AI-driven strategies to dominate trading floors, AQR Capital Management, using algorithmic investing at scale. So, if AI is this good, do human fund managers even stand a chance? Well, let's look into what AI can't do yet, where humans still have the edge. That is, understanding complex macroeconomic shifts. You see, AI struggles with major black swan events like COVID-19 or geopolitical conflict. Humans can see the bigger picture in ways AI can't. Regulatory and political navigation. Hedge fund managers have direct political influence and regulatory experience. AI can't lobby governments, at least not yet. Capital raising and investor relations. High net worth investors still prefer trusting a human trader fund manager. AI can't build relationship. It can't network at elite events or persuade billionaires. AI is powerful, but human intuition, connection, and strategic vision still hold weight in finance. And this brings us to the future, that is AI human hybrid funds. What is the winning formula? That is humans plus AI. AI handles the number crunching and real-time execution, whilst humans focus on big picture strategy, geopolitical risk, and long-term plays. The best hedge funds of the future won't be 100% AI driven. They will be AI augmented. What this means for traders and investors is, if you're a fund manager, you must adapt or die. If you are an investor, you need to understand how AI is changing the game. The future of hedge funds isn't about AI versus humans. It is about leveraging AI at the best. So, what do you think? Will AI completely replace hedge fund managers, or will human investors always have the upper hand? Drop a comment below and let's discuss. And if you want more dives into AI investing and the future of wealth creation, follow or subscribe.